Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng being the only outlier here is down 0.3%, but the Taiwanese index is up 0.6%.
Markets are reassessing the prospect of a potential Russia-Ukraine peace deal. 26,261 on the Nifty. The Nifty Bank is up about 0.13. The sensex is up 0.16.
We've got some earnings acceleration as well in this quarter compared to what we've been witnessing over the last few quarters.
This has been in the making for a long, long time.
Yes.
Painful wait. Going back to September of last year.
The company as well as the Gujarat state government have reached an in-principle agreement.
India is the third largest resource for this rare earth ore.
Given the momentum which we are seeing, this year we should be able to maintain a growth rate higher than the industry.
Well, bulls are charging ahead. That's the theme, of course.
Nifty Bank has been a big contributor to this move. The index at record highs nearing 60,000, up almost 10 to 12%.
You're right, there's been somewhat of a give back in performance relative this year.
Well, after touching record highs, there's massive profit booking that's taking place. Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Rima. With me, Surbhi, Prashant and Nigel joining in. Well, it's a milestone day. The Nifty, after 14 months, conquered, surpassed its previous peak, went on to hit levels of 26,100. The sensex inched past 86,000 mark for the first time ever, but you just don't get the feeling that the bulls are charging ahead. It's been a bit of a choppy session in the second half of the trading session. We dropped into the red and now trying to, climb and fight our way back. So the Nifty's managed to climb above 26,200. So we've got flat moves across the indices. Hi guys. I guess it's the Sensex monthly expiry plus US markets are shut today. And then, of course, profit booking, right? Every time you get to those high levels, you can always say there is that fear of heights.
We were discussing this in the morning that it doesn't really feel like an all-time high. It is an all-time high day. Didn't quite feel like that. One in the morning and the second half, dare I say, has turned out to be a little disappointing because you'd want momentum, you want participation. That's been missing.
Close at the highs, right?
Yeah.
Rima, those in Santa colors.
Between the green and the red.
December and Santa now.
Actually, we're all red, white and green.
At the beginning of the month. On Monday, you were talking about year-end rally, year-end, and, volumes quieting down.
Disappeared.
Red, white, green.
One more stat, Surbhi, that out of 500, NSE 500 companies, I was just looking at last time the Nifty made a high, which was September 27, 2024. Only 170 stocks are even higher. And actually, it's about... if you look at stocks which are up over 2% in the same period, high to high, there's only about 130 odd names out of 500. So, and that is, you can look at this data point, but to make the same point, this point essentially being that indices are at new highs. It's been like that, right? Hanging near highs for a while, whereas the broader market has been struggling a bit. Nigel is with us as well. Nigel, afternoon.
I thought you all forgot about me, guys. Those Christmas colors and all that. But, not a bad session, guys. Come on. I think it's okay. Par for the course. Normally, when you see a fresh all-time high, you see some kind of profit taking. But otherwise, it's pretty okay, I think. So the Nifty Bank is leading the way. The VIX has cooled off and the PCR as well has cooled off. So let's see whether or not we can build on to the gains from here. And the point that we've been making all through the day, it's not feeling like all-time highs. Time for the broader markets to start performing. And Pankaj Chibriwal, he joined earlier, and he said, in fact, in the past quarter, yes, the Nifty earnings were okay, but from the broader markets, actually, there were some green shoots with a higher amount of revenue growth from the broader markets in particular, and better earnings growth as well. So if the pieces have to come together, then hopefully the broader markets do participate as well.
Okay, well, yeah, indeed. That's the shape of the day. Let's actually move on, tell you what we've got lined up, and then we'll get to the trading calls as well. It has been a record high for the Sensex and for the Nifty after a 14-month struggle. But the stocks have given up gains from the highs, so it's a bit of a quiet session as of now. Flatline for the key indices. The other big story, the cabinet has approved a scheme to promote the manufacturing of rare earth magnets in India and reduce the import dependence. We spoke with, of course, the companies involved, and Parikshit will also join in to tell us about the likely contours of the scheme and when it's likely to be notified. Mahindra & Mahindra is celebrating a year of its Born EV platform with the launch of the mass-market 7-seater SUV. This is an EV again. It's the XEV9S. Can it, spark the fortunes for M&M once again? We'll find out. The management also talks about their EV segment plans overall. Whirlpool is another stock in focus. Promoters have sold over 11% stake, which is valued at about 1,600 crore rupees. More on this very important deal coming up. And of course, we'll start off first with the trading strategies. As always, Mitesh is joining in. Mitesh, and we've been discussing this since the morning as well. And I remember your morning call very, very clearly. And you'd said this, that expect some profit taking once we hit these high levels. And you had said that only if the Nifty decisively crosses 26,300 will you initiate fresh longs. Are you sticking to that call?
I think that's a good way to approach Surabhi because, we did get past 26,300 by about 10 points, but no sustenance over there and immediately kind of started tapering off. So I think till you get a, closing about 26,300 would be definitely welcome, but at least some kind of a burst about 26,300, I think that will convince me that the market is ready to get into higher levels and possibly build upon the up move which we have seen for last couple of weeks. Having said that, therefore, since we have not had that event, I think on the trading side also what we'll advise is to possibly reduce some kind of long exposure, even on the stock side, and identify some shorting ideas. So I have one buy and one sell. On the buying side is Motherson with a stop at about 112. Look for targets of 121. And Oil India is a sell with a stop at 422 for targets of 405.
By the way, some metal stocks are now fighting back. JSW Steel is back in the green. Hindalco is pushing towards a 1% gain. So some recovery and up move seen in these metal names. But let's talk about the other big story. One day after the government announced a rare earth permanent magnet manufacturing scheme with an outlay of 7,300 crore, CNBC-TV18 has learned that the government may move fast to operationalize the scheme and invite bids. The aim is to build long-term capacity for rare earth magnets, which is currently almost fully imported into the country. So what could be the contours of the scheme? What's the government thinking? Parikshit joins in with the exclusive details. Parikshit.
Well, the government wants to get down to business when it comes to setting up a domestic supply chain of rare earth permanent magnets as soon as possible. We believe that now that the scheme has been announced, the notification of the scheme could come out in just about 15 days. And post that, the government would like to invite bids by 31st of January 2026. This is what we're picking up from our sources. Interested bidders, we are told, will have to submit a detailed project report along with their bid applications to show that they have some sort of expertise in making rare earth magnets. And even if they do not have expertise, they have the global tie-ups or some sort of past manufacturing experience which will help them in making magnets in the country. At the same time, they will have to show the financial capability as well. In fact, having an ability to invest at least 1,500 crores in setting up a plant for 1,200 tons of magnet annually may be one of the criteria. The government may also invite smaller companies which can set up plants for 600 tons of magnets per annum. They too may be invited. Very soon, an inter-ministerial group consisting of 10 ministries is going to set up. They will be supported by India Rare Earth Limited, Bhabha Atomic Research Center to come up with a criteria which all the companies who are bidding for this scheme will have to follow. Companies are free to have global tie-ups. They can have a technology partner from abroad, but they must manufacture in India. That is going to be the base criteria. We also believe that during the consultation phase, when the scheme was being worked out and discussed with the industry over the last 3 to 4 months, at least 25 companies showed interest. How many finally go ahead and apply for this scheme? That remains to be seen. We're told by sources that at least 3 companies in India, Intellis, Ashwini Magnets and Midwest, have an ability to make rare earth materials in the country. But we definitely have to boost the refining capacity in a great manner as well. The government is also asking the Department of Atomic Energy to tell India Rare Earth Limited to expand its capacity of making NdPr oxide, which is a crucial raw material of rare earth permanent magnets, so that they can be a big input and raw material supplier to the domestic industry.
Okay, all right, got that, Parikshit. Thanks very much. Important story that is playing out over there. In fact, we had caught up with the Indian rare earth company itself, as well as IMFA. India Rare Earth Limited and IMFA, and they're the big public sector miners for these rare earths. IMFA is a private sector player, and they told us that they will look at the contours of the scheme very, very carefully, and then they decide whether they want to get into the manufacture of the magnets themselves. Listen in to both the companies.
India is the third largest resource for this rare earth ore. So currently we are having 8.35 million ton of rare earth. So for this, but this is lighter rare earth. So lighter rare earth, particularly NdPr we are having, but we require dysprosium and terbium, which are required for the this coercivity or to have this high resonance, which allows the retain high magnetization and the coercivity in the magnet. Right now, this dysprosium and terbium has to be imported, and on top of that, there are technology available like Protorial and this VAC of Germany. They are having this technology of making rare earth magnets without using the dysprosium and terbium.
We, of course, have decades of experience in mining, in processing of ores, etc. Now, I do recognize this is a different cup of tea. Conceptually, it may be similar, but it is a different cup of tea. But inherently, I would say that we are amongst the few who understand it off the bat. And it's a question of going out and evaluating the details when the scheme is out in the public domain, as it is at the moment, going through the details and looking at what is there on offer. But off the cuff, I would certainly say that it is a great opportunity. It is something that we would certainly want to evaluate and see that how it fits in to our own sort of capabilities and strategic ambitions.
Okay, so that's a word from IMFA. But, like India Rare Earths Limited, like Mr. Mohanty explained, there are still lots of tech issues that need to be sort of cleared up. The availability of raw materials, the actual materials with which these magnets are made, the actual rare earths, that also needs to be sort of seen. In any case, we have Deven Choksi of DR Choksi FinServe joining in to take a couple of questions, talk about some interesting stocks. Before I get to anything else, Deven, hi. Good to have you in. And, I think congratulations to all of us, to all the investors. We've finally seen the all-time high for what it's worth. But let's talk rare earths. It's obviously a very interesting subject. The question is that in the market, there are few stocks. I mean, you can go back to a GMDC. GMDC has already rallied some 70% this year. And like India Rare Earths was explaining that the actual elements which go into the making of these magnets, for that, the feasibility studies are still going on. They need to see if, there are enough deposits in Rajasthan and, elsewhere. Now, is it worthwhile to play a stock like GMDC, or should one just stay away? Do you think it's a very volatile area right now, this whole rare earths piece?
Yeah, hi, Surbhi. Good afternoon, and congratulations to all of us. I think we'll have to develop the habit of, congratulating each other every time, because I think this market is showing the signs of going up to 30 to 33,000 nifty in a span of around 12-15 months. So hopefully, I think we'll have more occasions to wish each other on this subject. Well, I think the like semiconductor, the newer segment of business is getting opened up with rare earth now. Probably, I think the entire ecosystem under which I think these particular magnets will be manufactured, I think it will be very interesting play. Not only mining. Mining is one part of the activity, important part of the activity. But the kind of technology stack it evolves into, I think is something which very interestingly one will have to look at. Maybe China is a leader in this particular space from a point of view of mass scale production. And I think that's where probably I think Indian companies would like to go back to. Because I think this policy might end up allowing the collaborations because of the nature of business that we are getting into. In my viewpoint, it's very early to, I think, pinpoint one or two companies at this point of time just because they have the ability to mine. How exactly this mined material will be taken into the factories and then ultimately to the customer is required to be seen very systematically. And who emerges in the ecosystem is again going to be very interesting. Maybe the user industries like auto hands, I think, would be the right choice to look into from that perspective. But still early, I think we wouldn't have much ideas to talk about, frankly, as far as I think who could be the real, I think, game player in this game, where I think they can take maximum amount of share in the business.
Okay. All right. Deven, stay on. Lots of other questions coming your way. In fact, be ready for questions on Tata Motors, PV and M&M. And I'm sure you know why, because that's the other big story that we're tracking in the market. It's a big launch coming in from M&M from their Born EV SUV platform, as they call it. The company introduced the XEV9S. This is a 7-seater SUV. It's aimed at the mass market, and the pricing seems to be very, very aggressive at just under 20 lakh rupees. The car was unveiled at Mahindra's Scream Electric event. So this was a big, big launch coming in from M&M. Hear out from the management on what this product could mean for the M&M portfolio. They talk about the new launch, production targets, and their overall plans for the EV space.
You know, we have launched BE6 and 9E. They was based on the Inglo platform. Inglo platform has multiple top hats. The 9S is one of the top hats. So this is the third vehicle that we are launching out of the Inglo platform. And 2 more vehicles are in progress. We have 3 products right now. So that means BE6 and 9E and then 9S. That's the 3 products that's going in the market. We have operational capacity right now about around 4,000 to 5,000. And that will extend the operational capacity will go to 8,000 per month by end of F26. That's March 26. As far as this product is concerned, the 9S, it's one product, 3 variants that Nal has shown us. So therefore, all the 3 variants will be made in the Chakan plant, and as we start the production in January, and we keep increasing the ramp up. So according to the ramp up, the operational capacity will increase. So the stabilization of the ramp up will happen by end of March 2026. That's when Rajesh was saying that it will go to 7,000 operational capacity, 8,000 operational capacity, and 7,000 deliveries. We have set out in 2027 between 20% to 30% in that range. Our electric penetration will happen. We are committed to electric, we are committed to sustainability, and we strongly believe electric is the way forward.
Electric is the way forward, and they've of course taken big strides with the BE6 and the BE9 itself over the last 12 months. And now this is a new one coming through. Stock's quiet. But then it's been such a huge outperformer, not just this year, last many years we're talking. Devin, let's talk M&M, and then I want to, actually get your take on Tata Motors PV as well because of their Sierra launch. But with M&M, it's anyway been a winner, right? So I don't know how much this new EV launch, how much it really moves the needle. How would you rank their performance on the EV side? And a lot of brokers still have targets northwards of $4,000 on Mahindra & Mahindra. The question is, can it still be bought?
Yeah, I think so. I think this company has proved that their successfully born electric vehicle launch portfolios are actually, I think, driving the customers into these products, I think, very significantly. In fact, today they have become a formidable force within the Indian manufacturer space in the automobile, wherein their born electric vehicles are becoming the preferred choice of customers, I think, because of course, the pricing point, which is quite compelling. Second most important aspect, the product and the product design. The differentiator is, I think, very significantly seen in this case for Mahindra & Mahindra. Now, this 7-seater vehicle coming up on SUV platform, again at a pricing point at which it is being sold, I think they are probably going to be having a good company with likes of Toyota Innova, which is basically, I think, a hybrid one, though I think slightly higher than their top-end model as at this point of time. But still, I believe that I think this company would probably have relatively better things to talk about. Wouldn't be completely surprised if I think their opening bookings, I think, could possibly collect more than 10,000 crores kind of an amount in the advance booking, which they have demonstrated in the previous booking as well. So I think even their 3-wheeler segment, I think, is firing on good guns, I think, with the export also. I believe that this company is possibly showing the big character differences for the launch of electric vehicle and taking the market share is concerned.
So you still seem convinced despite the rise of M&M. Devin says probably better times ahead still. Very quickly, just 10 more seconds. Tata Motors PV. Did the Sierra launch make you sit up and take notice? I mean, they've had a really difficult last many quarters. Any reason to buy the stock?
The pricing point, again, I think they are basically targeting the mass market, and the pricing point at which Sierra is launched, I think certainly it demands an attention. I would think that I think this company too deserves to be seen, I think, very differently, given the kind of launch that they are bringing into the portfolios.
Okay. All right. So that's on the auto side. I think we'll go to Nigel in just a bit. get cues from the FNO market. Right now, things are very flat on the Nifty. It's just nothing seems to be moving. Even the mid-cap index is completely flattened out. The saving grace is actually the bank Nifty, which is still retaining some gains. ICICI Bank, HDFC Bank. These are stocks that are still on the upside. So banks and financials really the only very clear patch of green in the market right now. Nigel, what about FNO? What's happening in the space over there?
Well, not too bad. You know, you want us to build on to the gains, but we at least hit the fresh all-time highs. And actually, things are going through a bit of a consolidation. I don't think it's too bad. And today's a day of writers, you know, because if you've written calls, you've written puts as well, you're making money today. First point, with regard to the India VIX, that's still cooled off. You know, I recall last week when we had gone closer to around the 25,800 mark, I had mentioned that the Nifty was down more than 150 points, but the VIX had cooled off. The VIX cooling off is always an indicator. And that's cool even today. So that's good. That's telling us that maybe, in fact, the markets want to test higher levels, at least on the headline index. And the one that will have to lead the way is the Nifty Bank. The 20 DMA is very deep now. It's close to around 1,000 points away from current level. So that's clearly the one that's helping us trend higher. One point is with regard to the PCR. Now, normally when the PCR goes to around 1.5, you see the markets cool off a little bit or go through a period of consolidation. We're getting away light, actually, because from around 1.5 at the start of today, we have come down to around 1.05 the last time I checked. And we're going through a day of consolidation, not a pullback. So that's heartening to see that the PCR has come back down to the middle of the range and we haven't seen any big correction out there. And the reason that the PCR has cooled off is because, you're seeing action on both the sides. So call writers, they're making money today. If you look at the 26,300, 26,200 call, the premium on both those two are down sharply. On the 26,300 call, the premium is down from around 100 rupees to around 70 rupees. While on the 26,250 call, premium was around 120 rupees. That's down to around 100 rupees or thereabouts. Even on the put side, 26,200 put, the premium has corrected out there. So there is some cooling off. Short point being that today is the day for writers. If you're writing strikes, then in fact you're making some money. Individual stocks are in focus. Gains, that's come down to the low point of the day. It's down close to around 4%. Earlier this week, there was some excitement. But the big surge in terms of open interest, fresh shorts being added in the system out there. Ashok Leyland has come back strong. Both cash market action as well as the FNO action is quite encouraging. Fresh buying being seen out there. And Bajaj Finance, a stock that had seen a big correction post its numbers. The shorts are getting squeezed out a little bit. That one's up close to 2%, open interest lower. Net, we hit fresh all-time highs. We have not built onto those gains, but not a bad day. The bulls are still in control. Santa should be in town in December.
Okay, all right. Santa did show up today.
Yeah.
Stay too long. Maybe he'll stay longer in December. Yeah. Okay. All right, let's take a quick break on that note. Come back on the other side. We'll have Rajesh Kothari of Alf Accurate Advisors join in. And we'll take a couple of questions in the market with him. Okay, welcome back. Flat afternoon, that's what we have. And by the way, that's a really important message that Mr. Milind Deora has put out on social media now. And frankly, as a Mumbaiker, I'm so glad at least someone's speaking about it. He's urging all the parties to literally come together. I think he's tagged, the Chief Minister as well, saying that can we put an immediate halt on all construction activities, all the digging, basically saying that Mumbai is crying out for help and this is a national health emergency, public emergency, and something needs to be done about it. So that's what I read last, that the GARP4 standards, which, on and off come on in Delhi, they have not yet been imposed in Mumbai, because apparently the last sort of word on this was that if AQI remains above 300 for 3 consecutive days, then they'll enforce, GARP4. But hopefully some action will be taken before we get to that level, because it's really, really, difficult out here as well. But anyway, back to the market now. Let's bring in Hormaz to see through the haze and the smog on the street. Because he's seen through that smog and he's found some buzzing stocks. So, Hormaz.
Oh, yes, there are. And even if the broader markets are in a bit of pain, even as the Nifty made a record high today, there are stocks that have singled out for news-specific moves and even volume-driven moves today. You look at Patel Engineering, that's a news-driven move today. It's the biggest single-day gain that the stock has seen since April of 2023, the 16% up move that you're seeing today is the second straight day of gains. The volumes today are the highest on record. More than 18 crore shares have been traded today on Patel Engineering. The 20-day average is around 17 lakh shares. The stock has moved above both its 50 and its 100-day moving average. And although the stock has turned positive for the month, it is still down 25% in 2025 so far. The Commonwealth Games coming to Ahmedabad has taken the stock of Ganesh Housing higher today. At one point, the stock was up almost 12-13%, still holding on to gains of 8.5%. The volumes today are the highest since January of last year. We've had close to 40 lakh shares that have been traded today on Ganesh Housing, and take a look at the 20-day average here. It's only 30,000 shares. The stock now is nearing a very important level at 871, which is the 100-day moving average. It did cross that intraday, but hasn't managed to sustain above that. And after 6 months of consecutive losses, the stock has finally turned positive for the month of November. Although on a year-to-date basis, it's still down 33%. Not to forget that the stock had tripled in value in 2024. Ashok Leyland, as Nigel was also highlighting in his F&O segment, the third straight day of gains for the stock now. It's a fresh 52-week high for the stock. Volumes are the highest in nearly 4 months for Ashok Leyland. 7 crore shares have been traded today. The 20-day average is just over 1.25 crore, so that's 1.25 crore. The stock has taken support at its 50 DMA consistently and has moved higher. It has not closed below that 50 DMA, which is around 140, 141 levels since August of this year. And it's had a fairly good year as well. It's up 44% year to date, and it is set for its best calendar year performance since 2017. And lastly, it's a new listing, Prostam Infosystems. The third straight day of gains for the stock. The biggest single day gain in volume since July is 17% up now on the stock. Is the third best day that the stock has had since its listing in the month of June. And we've had close to 1.7 crore shares that have been traded. The 20-day average here is only 3 lakh shares. And the stock has had a fairly decent run as well. It's up around 76% from its IPO price of 105.
Okay, all right. Interesting stuff there. With Ashok Leyland, I think there are a couple of brokerage calls as well. I think BNK has put out something there, and I think there is some buzz that as we are wrapping up the month of November, sales numbers are strong, especially for Ashok Leyland. We will know in about 3 or 4 days. And of course, I mean the F&O activity, etc., as Nigel and Hormuz point out as well. Rajesh Kothari of Alpha Accurate Advisors is with us now on the program. Rajesh, great to have you with us here on the show. Thanks very much. I think we should at least end higher, right? On a day that we hit a new high, at least some green by 3:30 will be the minimum bare requirement. But Rajesh, just the big story we've been focusing on since actually yesterday afternoon is this government push to build out a sector which does not exist, rare earths. It's ironic. I was just thinking that China built actually a lot of, not rare earth. Rare earth, of course, I mean, it happened much earlier. But a lot of what China did over the last 5-7 years was forced on them because the US would not, sometime in 2016-17, the US stopped supply of some critical technologies. And then China had to build out a lot of these industries in a big way. And of course, now we know where they're at. And something similar is happening now. The only difference is instead of US, it's China now. How do you think about something like this? I mean, a sector which the government wants to build out. It may not be easy, but as an investor, what's your perspective?
I think, what's important is I always believe that, adversity brings the new opportunities, am I right? Short term always becomes painful. You remember 1991-92 India moment, am I right? It was, I think, the toughest period India faced during that time. And during that time, what the reforms then started. Till the time India was like a locked economy. And then you see how in next 25, 30 years India has moved. And I think the current situation, not only from last 3 months, but if you look at from last 2020 onwards, the supply chain globally is breaking. Earlier, it was a constraint due to COVID. Then it became a constraint due to geopolitical conditions. And now it has become constrained out of choice because of the defense related thing, along with the economy, along with politics, all are getting combined. One thing is for sure, I think 40 years back, India was different. And today, India can afford to build this kind of capabilities. But let me tell you, there are many areas where we are far, far lagging compared to any other country, particularly China and US, because we have to keep these two countries as our benchmark and not the many other small economies. Look at the, patents. Look at China, look at US, and where is India? India is called the pharmacy of the world. But if you look at the patents now coming from China, increasingly, they are taking away more and more market share. So I think there are many more areas where India need to focus upon. Of course, we cannot chew everything together, building one by one, but focus needs to be there. Good thing is that a lot of equity capital is available, provided you have the right structures. And I think today, actually, there is an article in Economic Times by, the Biocon MD, Kiran Ma'am. And if you read that article, it's very clear, like how Hong Kong built that entire pharma R&D related funding. And I think India can also do something very similar. We have a brilliant minds, many of such companies, promoters, they have the brilliant minds. And together, I think we don't require 5,000, 10,000 crores. We require probably 1 lakh crores to build each of these verticals. And money is available. Capital is not a constraint. So,
okay,
we need to build this.
All right. Hi, Rajesh. Good afternoon. And good to see you in. Just one word on JMDC. The current market cap is 17,000 crores. The EBITDA that they'll do at best is 600 crores from the core business. That's been the highest in many, many years. We here at CNBC TV in itself had explained the company at 4,000 crores market cap. Currently 17,000 crores. So 17,000 crores for an EBITDA of around 600 crores. Clearly, the street is giving a big value to this rare earth opportunity, and it will fructify in the next 3 to around 4 years. As promised, maybe in the next 5-6 days, we'll try to get the GMDC management on CNBC TV18. Well, Rajesh, before we continue talking about the markets, I want to congratulate you actually, because I believe Alpha Accurate Advisors, PMS, they've completed close to around 16 years. So congratulations. I'm sure your investors have been very, very happy over the last few years, and wishing you to go from strength to strength, because your investors will be counting on you to create a lot of value for them.
Thank you so much, Nigel, for your best wishes. And I think, you guys have also played a very important role in covering the industry very closely. So thanks for all your support for the entire industry, and looking forward to have many more milestones.
More power for the next 16 years. So let's start off today itself, Rajesh. Give us a couple of ideas then. With the due disclosures, as you always ask our team to put it up on the screen, what's the top rejig you'll have done in terms of additions? If you could help us out in your portfolio. And I assure you there are disclosures coming up on the screen.
So I think the very important thing in the month of September, we have seen the bold decision by government to cut the GST. And I think the Indian consumer, I would say kind of a muted consumer in last 2, 3, 4 years. And I think this one very important bold step by government, along with income tax cut, along with interest rate cut, it means nearly 4 trillion INR infusion for Indian consumers. So what we are doing, particularly in last 30, 40 days, is realigning a little bit further adding to consumer basket, which includes primarily discretionary, and that includes automobiles, auto ancillaries, the luggage companies, the fashion companies, NBFC and banks, which are more consumer-oriented, the unsecured loans towards consumer-oriented NBFCs. These are the basically 4 or 5 segments where we are adding our weightages. And of course, some of it's coming from defensive sector like pharma and something a little bit from capital goods. But these are the basically segments which we are adding. We believe that automobile is at a very, I think the growth will continue in auto sector, particularly not only for two-wheelers and passenger vehicles, but I think you will also see the positive impact even on the commercial vehicle side. So we have been, we have added in the commercial vehicle in our portfolio. In the consumer segment, one of the largest luggage company, which we have been very bullish earlier, and then in between we exited after making huge wealth. We re-entered it. I think India, if you look at total airports, have doubled in last 10 years from I think 75 airports to 160 airports, and we are adding another 50 airports in next 5 years. There are different ways to play this. One way to play through airline, which we generally don't do it. Second is to play through hotels. Again, it is a high asset. Generally, we avoid. And third best way is to play through consumer discretionary, like luggage company, because you have to carry your bag wherever you go, and whichever hotel you buy, you need to have only, there are only 2 brands available in this country. So by default, it becomes a natural choice for us. So that's the one company which we added in our portfolio. And these are the sectors, where we have increased our exposure.
Thank you very much for that, Rajesh. Great speaking with you as always. Get into break. On the other side, we'll discuss what dealing rooms are saying in our segment D Street Chatter. Stay tuned.
Welcome back. A day when we hit fresh all-time highs, and guess what? We haven't moved a point. 25 minutes left for the end of the trading session, and the Nifty is absolutely flat. Good time to get a sense on D Street chatter. Nimesh, what are you picking up with regard, to the feeling, the left-out feeling?
Honestly, Nigel, not surprised with today's move. We were expecting it to hit an all-time high, and a bit of profit booking. So that's played out. Again, that's not the point. Nifty hitting an all-time high, but if you ask dealers, if you ask investors, the mood is very somber. The portfolios have not made money this year, right? And that's been a big pain point. The broader markets have underperformed so much, especially some stocks which are down 50-60%. So there is this, while on the Nifty, Bank Nifty, yes, it's an all-time high, but not the mood, at least from a market perspective. Flows, again, a mixed day of trade. The good part is we've seen a bit of buying interest back from larger FIs. Even if you look at yesterday's data, X of Bharti block deal, the FI and the DI both seems to be having a positive number. So that's a bit of a positive at the margin. Again, in today's market, I guess the flows are slightly tilted towards the PSU. So again, some select PSUs where there is a bit of buying interest back. I guess technically, 26,200, 26,120 is a level to watch. We are above that. So looks like it's still in favor of the bulls, but need to see whether it's backed by FI buying. But I think for today's market, it's basically a bit of profit booking once we hit the all-time high.
Let's focus on individual stocks then. What are you picking up?
Well, so the first stock on my list is Stylum. This is one stock that we have reported a couple of times in the past as well. There is a big M&A which is on the cards. Looks like the deal is around the corner now, and maybe you might see that fructifying. So that's something to track as far as Stylum is concerned. There is a big announcement likely there. The second stock is Saregama. There was a large block in the afternoon trade. And after that, there is a bit of a sharp recovery as well in Saregama today. I understand a leading FI investor was a seller, and maybe that's a potential clean-out trade from that particular entity. So if there is a disclosure, that could be interesting there. Third, a couple of stocks where there is delivery is buying today, REC and NHPC. As I said, some bit of buying is back in PSU names. These two stands out in terms of delivery buying today. And the last is Glenmark Pharma. There was an announcement that they've got a approval for one of the US plant. But in general, I guess there is momentum back and bit of buying as well from larger HNIs into Glenmark Pharma.
Thank you very much for that. Some other stocks where you are seeing movement. EMS companies are seeing a fair bit of profit booking. So Keynes, PG, Electroplast, these were the big movers yesterday. And today stocks are under pressure. So Keynes Tech down nearly 4%, PG Electroplast lower by 3%. Sirma SGS Tech also in the red. Ashok Leyland on the flip side has hit a fresh 52-week high. This is after the board approved the merger of NDL Ventures and Hinduja Leyland Finance Limited. And yesterday, we got the merger ratio between the two, and that stock has been on a tear today. Nimesh, thank you very much for that. For the markets today, we hit a milestone, record highs after 14 months. And CNBC-TV18 got its first global reaction from Jonathan Garner of Morgan Stanley. Now, he's been bullish on India. He's overweight on India. And, when asked on when FIs will come back into the markets, he says FIs never really left the Indian markets. They were participating in the primary market, etc. But listen in to his views and where we're headed.
Market starting to react to this with the idea that the policy stimulus that we've had in India is going to drive quite a meaningful upswing in nominal GDP growth, and earnings growth should accelerate from something like 7%, 8% to mid-teens next year. There is foreign investment participation in India on an ongoing and daily basis, and India's had a very vibrant IPO and secondary market, and it's a much wider range of investors that participate in the market than did in the past. So I wouldn't actually characterize it as being the case that foreigners have sort of been leaving the Indian market, or that something caused them to move out of this market in a major way this year. Going into next year, we are recommending quite tight market risk positions. So we do have an overweight India, but it's relatively small, and most of our other market calls are relatively contained. Overweight financials, consumer discretionaries, industrials. Those are actually calls that we're making generally across Asia. For example, if you were to look inside the Japanese market, we have much the same calls. We're underweight energy, materials, utilities, and healthcare in the Indian market. And so there are some quite pronounced sector relative calls there. I think for the energy sector generally, obviously it's more downstream in India than upstream, but it's a sector that is struggling as we go through an energy transition. And in the materials sector, we also have sort of a broad negative call on that outside of some very specialized areas like rare earths or or gold miners and things of that nature. That's not very easy to access those kinds of names in the Indian market. You can find them in places like Australia, for example. To be precise, we're 75 basis points overweight. At our maximum bullish, as I say, back during those 4 straight years of outperformance, we were at times 200 basis points overweight. So we moderated our bullishness on India this year. But then we have relatively tight risk positions in all markets currently. Ridham Desai and the team just set a sensex target of 95,000, but again, with a wide bull-bear range around that. And that would certainly be consistent with India outperforming because it gives more upside than we have for overall MSCI emerging markets, where we have something like a 1,400 target.
And what's the bull bear on the sensex?
76,000 up to 107,000. So quite a wide range.
Okay, well, that's Jonathan Garner, one of the top equity strategists as far as, markets go. A long time strategist at Morgan Stanley. 11-point change, so it's absolutely flat, not very much going on at all. Mitesh is with us with some trading ideas. Short-term, Mitesh, what would you recommend?
One SCVT and one BTST. BTST on ICICI Bank, that's one which has bounced back nicely today. It's near the day's high. So BTST here with a stop at about 1383 for targets of 1410. And ONGC on the negative side, sell on STVT with a stop at 246.5 for targets of around 240.
Thank you. Let's get to one more story. The centre is expected to table a list of amendments to...
Okay, I think... Reem, I think your mic's playing truant. Well, let's just, so let me toss it across to Yash, who's joining us, right? So we report, the cabinet basically, the insurance amendment bill was put in front of the cabinet yesterday. The bill is now going to go to the parliament when the winter session of parliament starts. And of course, most likely it's going to be cleared. We've, of course, been reporting on what is there in the insurance amendment bill, 100% FDI, composite license, etc., etc. Yash has been speaking with both industry CEOs and analysts to understand broad strokes, broad contours of, who benefits and perhaps who's at a bit of a disadvantage. Of course, remember, this is all just feedback and companies will maneuver. They've been preparing for this. They will maneuver so that, they are on the right side in that sense. But Yash, take it away.
Well, Prashant, as you rightly pointed out, it is once in a lifetime moment for the insurance sector, as the complete dynamics of the sector are expected to change with the insurance amendment bill getting tabled and approved in the parliament. As far as the bill is concerned, I've been speaking to a lot of analysts and industry players, and the general feedback is that the insurance amendment bill largely is going to be a negative when it comes to standalone health insurance companies. That is on one side of the bill. At the same time, the insurance amendment bill is going to be a big positive for distributors of insurance in the listed space. Of course, we have Policy Bazaar or PB Fintech, to whom the bill could benefit in a big way. Why? I would tell you that. The insurance amendment bill, at least 3 out of 5 major amendments, seem to be negative for standalone health insurance companies. The first one is 100% FDI when it comes to the insurance industry. This is expected to bring a lot of large global players into the sector, and so far for all the new players, the first choice of entry has been health insurance market. Here, there are about 6 players at this point of time, but with more players coming in, the competitive the intensity could go up. The next one is composite insurance license. Large life insurance companies could come in the health insurance space, having the capability to disrupt the market, but health insurance companies may not have the capability to enter the life insurance market, and hence there's a higher possibility of the health insurance market getting disrupted with the agency force which they may bring. The third one is reduction in initial capital and net worth. Now, this is also expected to bring a lot of smaller players which may tap the untapped areas of health insurance market, again disrupting one of the most important growth areas for standalone health insurance companies. And all these 3 points expected to bring more business for distributors like the ones of Policy Bazaar.
Okay. All right. Thanks very much, Yash, for those details. So that's an important development to track as perhaps that bill makes its way, the amendment bill, that is, makes its way through Parliament. Thank you for that. Well, we've got Amrish with us. Amrish, good to have you in. Let's first get your stock. I think your pick today is from the automotive space, is it?
Absolutely, Surabhi. The pick is Castrol India, which is a 51% subsidiary of British Petroleum, largest private sector lubricant company in India, both in automotive as well as industrial segments. And they have about 20% market share, 3 manufacturing plants, and around 160,000 retail outlets throughout India. And now the focus is on tier 3, tier 4, and rural areas. So they have around 40,000 outlets in rural areas, and 25% of the volumes comes from there. They have now diversified, their products and services into auto care and chemical management services. Strong free cash flow, minimal capital requirements going ahead, and high ROEs. And along with that, the payouts are also decently high with the dividend yield of about 7%. So my expected EPS for calendar year 26 is about 11. And with this, my target price is 265.
Amrish, hi, afternoon. I remember about 2 years back, you were looking at Tata Tech and Tata Elxsi.
Right.
But
been an underperformer.
They've been quite the underperformer. We were just looking at the performance of these companies vis-a-vis all-time high levels, and both Tata Tech and Tata Elxsi about 50% off their all-time high levels. That's quite a stark underperformance. Do you see it reversing, and what did you do with your own holding in these stocks?
No, in fact, I think the bigger issue was execution, which hopefully now should get resolved over the next 2 quarters. And we have seen, like you rightly said, about 18 months of underperformance. So I expect that at least there should be some pickup over the next 2 quarters. I think that's the time I've given for my investments, in the sense to decide whether to continue holding on or whether to book out. So I'll wait for the 2 quarters. Hopefully things should improve.
Okay, all right. Stay on, Amrish. We'll come back to you for some more questions, and also we'll be in the last leg, countdown to the market close. Back in a bit.
Welcome back. Looks like it's going to be a flat close, off from the intraday peaks of 26,310, but the Nifty might be able to defend that 26,200 mark. Banks have done pretty well. In fact, the banks and NBFCs are in top form. The Nifty Bank is up 230 points, and the top three gainers are from that space. So Bajaj Finance, ICICI Bank, Shriram Finance, all are doing well. And even HDFC Bank is supporting, along with that Kotak Mahindra Bank, with about a 0.5% up move today. In conversation with Ambarish, Ashok Leyland, 7% up, fresh highs. We were just saying that it seems to be related to the merger between Hinduja Finance Limited and NDL Ventures. Have you done any analysis on what the impact could be on the listed company?
No, I've not done too much of analysis on this merger. But then if you're talking of CVs overall, I think going ahead, clearly the next couple of months looks good from a CV sales point of view. And because of which, again, we have also seen Tata Motors CV also moving up decently well. So expect both Ashok Leyland as well as Tata Motors CV to at least see about 8 to 10% higher over the next 2 to 3 months, based clearly on the figures.
Jonathan Garner, when we spoke to him from Morgan Stanley, he has added Maruti to his focus list in the Asia emerging market portfolio, the focus list there. And again, the same reasons, beneficiary of the GST reform, mass player, etc. Do you like Maruti Suzuki at these levels, or would you go with ACA and M&M, for instance?
No, I think the biggest beneficiary in the passenger vehicle segment, where the vehicles at the lower end, and Maruti has the highest share in that space. So Maruti is clearly the biggest beneficiary. Mahindra also I like a lot, especially because of their new launches, which they have done in the last 12 months. I mean, all of them are doing extremely well. And especially on the EV side. So Mahindra also has a couple of legs up. I'll not be surprised if we see the 10 to 12% higher.
Okay. All right. Amrish, just stay on. We'll start wrapping up. Well, it's been an interesting day for the market. A day where you got the all-time high and then it just fizzled out. I mean, you'd never imagine, Rima, right? If you hadn't seen the first half an hour of trade, that today was an all-time high day for the Nifty and for the sensex.
It just doesn't give you the feeling, you know, when we have all-time high levels, you always put this bull's charge ahead. It just doesn't leave you with that feeling. But again, it's a milestone, it's a momentous day because it took a long time coming, 14 months for our markets to get back to all-time high levels, and it's still 26,200 on the board.
Absolutely. It's been a test of patience and resilience for domestic investors, and they have prevailed. And the index is back to where it is. So let's quickly recap the large cap participants. We're talking about a 20-point up move on the Nifty as we're closing out. And a lot of that is actually coming in from IT and BFSI. And that will reflect in the Nifty gainers. Bajaj Finance, 2.5% higher. ICICI Bank, 1.3% up. Look at something like a Kotak Mahindra Bank, about 0.5% higher. Shriram Finance, 1% up. So these are your main gainers. But then you also had stocks like SBI that did not participate. They chose to sort of sit out of the up move today. SBI was down about 1%. HDFC Bank about 0.5% higher. So let's move beyond BFSI and see what else worked for the market. Lever is up about 1.2%. Hindalco managed to put on about 0.7%. And a lot of the IT stocks found some traction once more. So HCL Tech, Infosys, these were some of the names on the upside. Some of the metal names like Hindalco and JSW Steel, they continued to shine on as well. So that's the upside of the screen. The downside now, lots of cool off in the auto space. Eicher Motors 3% lower, Maruti 1.5% lower, Bajaj Auto down 1.5%. So these were the names that really stood out. Adani Enterprises has lost about 3% as well. ONGC is down about 1.5%. Let's now talk about the mid-cap market. Here as well, at the index level, things completely flattened out. The advance decline ratio is also neck to neck. 1:1 is what we're looking at. Some interesting movers and shakers. Patel Engineering, they won an order. Stock really had a superb day, 12% up. Sami Hotels, we spoke with the management in the morning, sounding very, very confident about the second half, talking about a higher margin trajectory going ahead as well. So that stock did fairly well. The other gainers of the day, definitely the CV players. Tata Motors CV, 6% higher. Ashok Leyland, 6.5% higher. Actually, even Escorts Kubota had a good session, 4.5%. So these stocks did well. And then you have, of course, some of the key losers. So worth highlighting some of these names as well. On the downside, look out for Whirlpool. After that large deal, stock was down about 11-12% throughout the trading session. And a couple of the real estate names have seen some profit taking today. Sobha, Brigade, BP, DLF, a lot of these stocks on the downside as the day winds up. So the bell has gone. 14 points up on the Nifty. All-time highs hit, but we didn't quite close above those levels. So perhaps the bulls will have to fight a little longer. With that, it's curtains on this edition of Closing Bell. But thank you for watching and keep it with us because Markets Forward is taking the action ahead.